Hey there, it's Casey Dimon, TaxSaleAcademy.com. Thank you so much for joining me on this week's question segment. Today's question comes from Adir, and Adir says, what liens stick? And what he's referring to is what liens will stay once a property goes through tax foreclosure. So, fantastic question, okay? So a lien against a property is a claim against the property. It's a mortgage. It could be a mechanics lien, IRS lien, that kind of thing. Now, there are different statuses of liens. An easy way to understand this is that there's a first mortgage and, say, a second mortgage. Okay, the property owner does owe both of these mortgages, but that first mortgage is considered more senior, more powerful. So if they foreclose this first mortgage, it wipes out that second mortgage or that junior mortgage. So the more senior the lien, the more powerful it is. That's just kind of a quick little illustration for you to kind of put everything in context. So in nearly every state, a tax lien is considered a senior lien, a super lien, a priority lien, whatever you want to call it. Now, whether that tax lien is foreclosed in a tax lien state by the lien holder or in a tax deed state where the county forecloses their own tax lien, a tax lien will wipe out nearly every other lien. This is going to include your mortgages, mechanics liens, HOA liens, stuff like that, okay? Your private liens. Now, many people are really just shocked to hear this, but it doesn't make sense to them, okay? When we sit back and think about it, it kind of will make sense. So if a lien holder wants to protect their interest, they can simply pay off those taxes. If the mortgage holder on that property doesn't want to lose their interest, they can just write a check and pay off those taxes if they want to. But think of it this way. Why should the county suffer and not get their required tax money that they need to operate that county, provide so many amenities, simply because the taxes weren't paid by the mortgage company, right? Why should that mortgage still stand even though that mortgage company, that lien holder, whoever it was, had the ability to pay those taxes, but they failed to do so, or they didn't want to do so? So when the county forecloses, it's going to wipe out all of those other liens. Now, there is an exception to this, okay? You'll notice I said most other liens. I actually refer to it as private party liens. The exception includes liens from other governmental agencies, and these will stick in many situations. So think of it this way. The government is going to wipe out all the private party liens, but you have two branches of government, this branch and this branch. This branch is handling the tax lien, so it doesn't make sense for them to wipe out another government agency's lien. So most of the time, your government liens are going to stick. Now, obviously, there are techniques where you can get those reduced or eliminated, but if government liens exist, then tread lightly. And make sure, of course, you do a little bit of research to figure out what liens exist and make sure there's notices and stuff like that. And speaking of notices, that's going to be our other exception. This is where the county, they just screwed up, right? And they did not provide the proper notices as required per state statute. So, remember I was talking about the mortgage holders a minute ago? Those mortgage holders are required in most states to get a copy of the delinquent tax notice, which gives them the ability to pay off those taxes. So, in other words, if the lien holder did not know what was going on and they didn't have the choice to pay off those taxes because they did not receive that notice, then that lien might actually stick to that property, depending on the state and all sorts of other legalities and stuff like that. So understand that is a possibility. It's kind of rare in most states, but it does still happen from time to time, just when counties screw up. So in short, all liens who receive the required notices are extinguished with the exception of other governmental liens. So, dear, hopefully this helps you out. If you or anybody else has any other questions about tax law investing, feel free to leave them down below under this video as a comment or ask them on any of my other videos right here on YouTube. I'll see you next week for our next question segment. In the meantime, if you are looking to learn more about investing in tax-sheltered real estate, just head on over to TaxSaleAcademy.com where you can join the most comprehensive step-by-step training program by clicking on the join button. Or if you're not quite ready to join the academy yet, feel free to go to that same website and pick up my book right here, The Tax Sale Playbook. The book itself is free. Just cover the nominal shipping cost to get it from our warehouse to your front door. Take care. Bye-bye.